What's going on, everyone? Welcome back to the channel. This is the Daily Compounding Portfolio, where we are building long-term wealth one day at a time. Every single day, we deposit money invested into high-quality dividend stocks and slowly grow this portfolio into a snowball that eventually becomes a massive income machine. This is all about consistency, discipline, and letting time do the heavy lifting. So today is January 23rd, 2026, and we made another deposit, guys. Let's get into today's update. But first, quick disclaimer as always, I am not a financial advisor. This is not financial advice, and this portfolio is for entertainment and educational purposes only. Always do your own research before investing. All right, today's deposit, guys. So today we deposited $75 into the daily compounding portfolio, and this is exactly what the challenge is all about. So it doesn't need to be thousands of dollars at once. It's about building the habit. Most people wait for the perfect time to invest, but the real secret is just showing up every day, putting money to work, and letting dividends and compounding slowly take over. So today, with that $75 deposit, we bought 4 different dividend stocks. Let's go through each one, you guys. So the first one here is McDonald's, ticker symbol MCD. Okay, I'm gonna click over here, and we bought. So we own $2.74 worth of McDonald's, and today I believe I bought $1.74 of this one. This is $1.74 right here. We just had $1.74 after we bought whole shares of the other 3 stocks. So, it has a dividend yield of 2.34%. We're still going to get a dividend, even though we own that small amount. McDonald's is one of the most iconic dividend stocks on planet Earth. This is a business that has survived recessions, inflation, wars, everything. People always find a way to eat at McDonald's. And the best part, McDonald's has a long history of raising its dividend consistently year after year. This is the type of blue chip compounder that just quietly builds wealth over decades for you. So adding McDonald's is like adding a cornerstone to the portfolio. So, all right, guys, let's get into stock number 2. Ticker symbol KHC, Kraft Foods. All right, this one is a classic consumer staple, you guys. They own brands that are literally in every grocery store. Kraft Heinz ketchup, Oscar Mayer, Kraft singles. These are products people buy no matter what the economy is doing. And Kraft Heinz also offers a strong dividend yield, which is exactly what we want in a compounding portfolio. More yield equals more cash flow, right? And more cash flow equals more reinvestment. So Kraft Heinz is another strong long-term income builder. Take a look here. We own 1 full share. So today we bought 1 full share. We'll go down here to the bottom. And we'll look at our purchase. Right there, we paid $23.14 for it. Okay. Now, they are going to spin off into 2 different companies, you guys, just so you know. I think in the second half of 2026. But that's okay because it just means we're going to be getting another company in our portfolio. So let's get into stock number 3. Ticker symbol PFE. Pfizer. The third stock we bought today is Pfizer, guys. Now, Pfizer has been beaten down lately, but here's why I like it in a portfolio like this is Pfizer is a massive pharmaceutical company with global reach. They pay a solid dividend, and healthcare is always going to be needed. The world is, after all, aging. Demand for medicine isn't going anywhere, so buying Pfizer at lower levels could be a long-term win, and we get paid to hold it through the dividend. That's the power of dividend investing. So we own 1.039093 shares of Pfizer. Its current dividend yield is 6.59%. That is pretty good, you guys. So those are going to be nice dividends when they start coming in. We'll continue to build all the positions in the portfolio. Let's go into stock number 4. Hormel Foods is the next stock that we bought. So And it's the fourth stock we bought. We added today is Hormel, ticker HRL. Hormel is another defensive consumer staple. They sell food products that people buy consistently. They've been around forever. Sorry, guys. Somebody coming in the door at the same time making a video. So, and they're also a dividend growth company. This is one of those slow and steady businesses that may not be flashy, but it's reliable. Perfect for a portfolio designed to snowball into future income. That is our goal. So the current share price, $24.60. We own 1.040916 shares. It represents 4.27% of our portfolio. The dividend yield is a healthy 4.76%. That's the thing of beauty, guys. That's what we want. We want those dividends to come in. We're going to compound them. We did make an executive decision today to go ahead and just reinvest the dividends instead of trying to manage them as they come in and deploy capital. Because in the beginning like this, when you don't have huge amounts coming in, it's harder to deploy it into those growth stocks. So we're going to wait until we're getting some decent dividends coming in before we start taking the capital and redeploying it to other growth stocks, because we're trying to build a dividend portfolio and then redeploy those dividends into growth stocks, because a lot of growth stocks can on average return about 10% a year, and a lot of times that'll beat what a dividend stock does, but over time dividends reinvested really compound and can do great things as well. So let's make sure that we're continuing our reinvestment journey in other ways by deploying more capital into growth stocks, and also we can take some of that cash and put it back into these dividend paying stocks. So the big picture today, guys, was we made 4 purchases: McDonald's, Kraft Heinz, Pfizer, and Hormel. And this is what daily compounding looks like. We're not chasing meme stocks. We're not gambling. We're building a portfolio of companies that pay us real cash. And over time, those dividends, they get reinvested and the snowball keeps growing. So today it's $75. Yesterday it was $100. But fast forward 5 years, 10 years, 20 years, this becomes something huge. Most people underestimate what consistent investing can do. The goal is simple: build dividend income that one day pays the bills, pays the mortgage, or maybe even replaces a job entirely. So if you guys are enjoying this daily series, make sure to subscribe, because we are doing this every single day the market is open. Drop a comment below. Which of these 4 stocks do you like the most? Which of these 4 stocks do you dislike, and why, if you dislike it? Remember, the snowball starts small, but it doesn't stay small forever. I'll see you guys tomorrow for the next daily compounding update, which is going to be actually Monday. So it's Friday, January 23rd, 2026. So we get the weekend off. We might do a couple of videos though tomorrow. Anyways, we'll do some YouTube shorts just to keep you guys some content coming in there, okay? So thanks for watching, and we'll see you in the next video.